Your guest says worst case scenarios for the market still are not priced in. Young Yu Ma is PNC Asset Management's chief investment strategist. Young, thanks for coming on. So what is and I'm not trying to be dire up here, okay, but we're kind of trying to look at all the scenarios. What are the scenarios as you and your team see them?
Thanks. First, it's great to be here. I would say that worst case scenarios, as was talked about relating to the VIX and even oil futures curves, are not priced in here. There's some risk priced in for sure, but if there were energy infrastructure to be destroyed and taken offline for a year or two, that would certainly cause a much, much greater disruption than we have currently, and that is currently being priced in or anticipated into the markets now. We don't expect that's going to happen. We do think that is more of a worst case scenario right now, but the markets are not braced for that, even if it's low probability at this point in time.
So, and again, nobody is hoping for this, but I will add that President Trump this morning basically said they're going to end civilization or whatever the words were. We don't know what they mean, but it's not out of the question to believe they could mean, to your point, the destruction of a lot of that infrastructure that you referenced. Are you surprised by a VIX at 26, not at 46, not even at 36, by a market that is flat to maybe higher over the last week?
Well, I'm a little surprised. I think a little more risk should be priced in here, but I don't think dramatic more risk should be priced in here. I don't think we should see VIX at 40. I don't think we should see a extreme drawdown in the equity markets here. I would like to see a little bit more nervousness out there and people not jumping as quickly on the smallest tidbit of information to try to get long here. And like we saw that rally in the last 30 minutes of the day. But that said, I think the market is probably being rational here. There's some element of the wisdom of crowds that this probably isn't going to get to those more extreme scenarios. And the market is looking at some of the underlying pillars, some of the plays where there are value in the market right now, and wanting to make sure they don't reduce their longs the way that they did in April of last year, when there was that type of concern that turned out to be largely misplaced.
How does China insert themselves into this conversation, and potentially what does it mean for their markets?
Well, China has leverage over Iran. Certainly, China has a strong vested interest in seeing stability in the Middle East. China has a lot of investments throughout the Middle East, and Iran buys a tremendous amount of its infrastructure and goods and electronics from China. So, to the extent that Iran relies on China, China has some ability to influence those discussions, and China is looking for peace in the region, or at least stability in the region, given the extent of its investments, not just in Iran, but especially across the Middle East. So I think there are a lot of backdoor channels at work right now that are applying pressure in various directions, both in Iran and in the U.S., and that amount of pressure that's being applied right now probably leads to somewhat of a de-escalation in the coming days.
But is China front foot or back foot? And I asked that going into Trump-Xi summit, and I asked that as a member of the global markets who wants to see a stronger Chinese economy, who, if anything, was starting to show a little bit of traction. So China front foot or China back foot?
Well, it kind of depends what the dynamics are. There's a lot of geopolitics in play that China is being influenced by here as well, that are also in flux. I would say that what is interesting about China right now is the extent of its innovation in technology and innovation in AI, and that is not slowing down, and that is going to remain kind of neck and neck with the U.S. in a leadership position globally. So I do think if we're looking past the current events, if we're looking 9, 12 months out, thinking about where China's growth is coming from, it really is going to come from the tech sector, from innovation, from AI as well. So, yeah, I think their tech sector is probably pretty well positioned. But, of course, the geopolitical questions around China can cause a lot of volatility, especially in the short term.